Okay, guys, welcome to the next video in this series here. Now, my attention when I started this was to transition right over to our time-based charts. But yesterday was so remarkable. I just felt like I had to show you this. So I'm going to walk you through a few trades or a few setups here that were on the 2000 tick. Now, I keep the 2000 tick open. I do have the screen real estate to do it. If you do have the space, or if you got extra monitors, or you can create a quad on your laptop or whatever you're using, there is definitely advantage to having multiple views of the market. The 2000 tick will be close to the 1 minute, but not exact, right? Obviously. And there's, of course, the advantage of tick charts. We remove some of the noise, particularly pre-market. So it's there's just advantages to it. It's not going to look the same as a 1 minute. It'll be similar. But anyway, to move on here, I'm going to try and do this in market replay. Ninja is not the easiest to work with in market replay, but I'm going to try and do it here to reduce some of the, oh yeah, that's easy in hindsight commentary. But I think that won't be an issue here, because these are just so striking. If you haven't seen this before, you have to see it really to appreciate it. And I think that it may influence how you're approaching the market in the future here, which is what we're trying to do, is give you the right tools and let you choose the tools that are appropriate to how you want to approach the market. So I'm recording this on Tuesday the 3rd. Partly because it's being pre-fed here. I thought it might be a slower day. It might be a good day to finish this up. But additionally, because yesterday was just so stunning, I just wanted to show you this. And then eventually, we will, maybe if not in this video, in the next one, I'll get to the time-based charts here. But let's just focus on the 2000. So a couple of things here. Note, I've got on the chart, I've got volume profile, I've got the auto fibs, I do have the measured move indicator in the background, I've got the market structure, I have the zones turned off at the moment. Oh, what else? Well, of course, our toolbar, and there's some things in the toolbar here that I'm going to pull as we go through this here. I think that's everything I've got on the chart. So let's just look at this here now. Okay, so I mean, this is like 9:42 in the morning here. So we've had the open. Here's the open right here. So I have our initial balance indicator on the charts, which you can see because of the pre-market and the initial balance. So I have the pre-market high, pre-market mid, pre-market low. Here's the open, and we define the opening range as the first 30 minutes with these yellow lines, right? So I have my opening range. I have the open, and one thing you'll note, right, this is very common here, I reference this in some of the other videos, is the initial move off the open is almost, not always, but almost always a head fake, right? So they drive it straight up. All right, take it straight down, right? It's just stuck in retail, right? The people that want to jump in, oh, we're going to rally, they get hammered. So, but a couple of things here. So if it's not uncommon to wait for the first half an hour to get a sense of, okay, well, how far are we moving? What's the volatility look like? Is it a quiet open or an aggressive open? Lots of reasons to give the market a bit of time to settle into whatever the initial drive is going to be. So this wouldn't be an unreasonable time to be approaching the market. Now, could you have taken some trades here? Well, yeah, you could have. But I think it's more common here. I typically won't trade in the first 15 minutes. I like to, see how extreme the moves are going to be. Let that initial drive play out. Now, there are times when there's something that's so good, I might jump in, but yesterday I didn't go in early here. So let me put some of the things back on here. So let's put on our supply-demand zones. And a couple of things here, this was a good example here, so I wanted to take a minute and talk you through this. Now, note here, particularly those of you that might be trialing this, or you've leased it because you're kind of curious, you want to do a little experimentation. As I have it set now, I have it set to show the supply-demand zones as wicks only. Now, if you are not familiar with the market structure and the theory behind this, then this is not going to be particularly useful to you. You're going to have to come over here to our site. Well, it's on our YouTube page as well. But here under the market structure here, there's some course, there's some text, but these two videos, you're going to have to watch these here, particularly the first one. This one is lots of examples, but the theory of it, you're going to need to watch this, right? Otherwise, what I'm going to talk you through here is not going to be clear to you. So I want to encourage you, if you've not yet done that, watch those two here, because this will be much more meaningful to you having watched those. So in that, I talk about some of the setup options here in the market structure in terms of options you have in terms of how they're displayed. So I have them, I typically will keep them to display wicks only, because here, I'll go over one here. Here I have it on the full candle, and it can be just too much. Right, so you look here and say, okay, well, where in this, I mean, where am I selling in here? That's a whole lot of supply. So thus the advantage being, if I'm over here and I'm on wicks only, it's like a marker. It's telling me that there's a candle there that's a potential supply or demand zone, but it's not taking up massive chunks of the chart. And so that's why I do it. Now the danger here, you gotta look for it. If you note right here, there is a little wick here. Right here, you see it coming across. You can barely see it. It's a wick of the supply zone there, right? So it's kind of noting it. But if you weren't looking closely, you might miss it. So if I come over here, you see there it is, right? It's this huge here. If I draw it this way, it's this big candle right there, right? That's the supply zone. Oh, but over here, right, I'm only going to see just the tip of it. Now, just take note, where is the tip of that? Track that over. We are literally splitting a golden zone here. Oh, those are the 65s, right? There's the 618, there's the 65. So we're splitting two 65s. Right, because we've got a couple of pivots up here, and it's going to pull the fibs, right, from all of these pivots, right, so you don't miss one. So just worth noting, right? So that said, now let me put the measured moves on. Okay, so a couple of things to note here, and again, if this is new to you, it shouldn't be if you've tracked any of our material previously. I virtually hammer it home on every video because it's so powerful, and as I will tell you, if you don't know where it is, you are absolutely blind to what's actually happening in the market. So here, this is just pre-market here. I could do the same thing yesterday, exact same thing. Here are the last two measured moves. I could do this all day long on every chart on any time frame, any asset. Doesn't matter. Doesn't matter. I've been doing it for 3 years, right? I've probably 3,000 videos. I've shown this over 10,000 times. It is the dominant algo in the market. And when I say that, I mean it's the dominant. Actually, let me be more specific. God knows how many algos are in here, but this is the one we can track because it leaves this big footprint. And here's that footprint right here. Here's the footprint right there. There's your algo right there. Simple, right? Deceptively simple. Yet it's how the market moves at every degree, every time frame, period. Every asset doesn't matter. Doesn't matter. It's the single most important technical component. You have to have this. I don't know how anyone trades not knowing where that is. Right? You're just absolutely blind. As I like to say, you're walking through a minefield with blinders on if you don't know where that is or what it did last. I think I've harped on that enough. Okay, so here we see it, right? Here it is, right? So you can see right here, here it is kicking in. Here's its target. There's the reaction having hit the target. How do we know it's an algo? It's not always necessarily this. It's what happens at the target, right? They're taking profit. Okay, so we've got one zone right here. We've got another zone right here. So let me get into the market replay here. So I'm going to try here. I won't make this a 2-hour video. Because I'm going to pause the video. As we get to decision points, I'm going to pause the video here, and then after that we'll fast forward here, so this won't go for too terribly long. But looking here right now, so we can see that algo has completed here. We get a couple of wicks down here to get a new low here. Obviously, you can see what they're doing. Okay, well, I shouldn't say that, right? It should be relatively clear what has happened down here with these wicks, right? So this is a great example, one of the maxims we have in the room, right? It's posted, never, ever, ever, under any circumstances, sell the low of the day or buy the high of the day, right? Now, there are times, of course, right, where there are going to be trades that run away, and you're going to say, well, you told me never to do. Over time, you are so vulnerable here to getting just exactly what happened here, right? So sellers, right, they just get ripped, right, immediately in their face. I digress, right? So this is something to be mindful of, right? So we don't want to sell that, right? Just don't ever do it, right? If you can take my word for it right here, right now, or let the market teach you, my advice is going to be much less expensive. Okay, so here we go. So you can see what happened down here. So now we're starting to rally back up. Okay, so if you were at this moment in time yesterday and you're looking at the market here, well, do we have any confusion about where the trend is at this moment in time? And if you were slightly confused, look up here, right? Trend is down. Why? Why is this saying the trend down? Because of this is actually, well, you can barely see it there. There's a break of structure behind the change of character. How I know it is because this is the last high. We get a break here, right? We go down and create this low. We double bottom here. Now we're coming back the other direction. So not only is the trend down here, just in terms of visually looking at it here, we can see the algo footprints. So we know for this to change trend, we're going to have multiple breaks of structure, and often, right, during the course of the day, per the way the market structure is defining trend, we'll have uptrend, downtrend throughout the course of the day. Can be beneficial to you. So if you're looking right here, this is the week low because this is the last low. So if we're gonna retrace here and come back up, your expectation is that this would be the target because that's the week low, unless we're breaking structure here and then we potentially have a trend change. We shall see. Okay, so let me just play this here. So at this moment in time here, it's probably better if I do it this way because this is important that you see this. Okay, so here I'm just draw this one in because we have this little zone or order block tool here, so you can draw them just as they're designed to be drawn. So again, I prefer to do it this way rather than have this giant cluster here where they're so big. So here's the one I just drew, and then we have another one inside of it. All right, so let's come back over here. So let's just use a little bit of market replay. So knowing that the trend is down, and this is a perfect example of the trade that is so hard to take. And in fact, in those videos here that I was just talking about here, particularly, there's a great video here where I went to great length to show you. This is an example. I did it in a line drawing to show you that this is the trade you want, but also the trade that is the most difficult to take. Because right now, look at the market starting to accelerate here. Well, let's just do a little market replay here. And oh God, what's going to be the right? And we'll go, okay, let's see how fast this goes. Okay, so here we come. Okay, let me just pause it right there. Now, right here, are you thinking you want to sell this? I mean, just human nature, right? We're looking at this going, whoa, pretty strong reaction off of the low. But I know I'm coming into these zones here. So if nothing else, just the fact that I know these zones are here, and I know, because again, if you watch that content, that I've left behind these big supply zones here. If we're coming up here, I may be interested in a short, even though the market is ripping right into it. It's hard to take because your immediate thought is, oh my God, we're going to launch. Well, let's just play it forward here, and I'll try and stop these at the right time here. Now, is there anything here to tell you that, oh, I want to be a seller here? Well, you might be looking here saying, boy, I'm coming up to a high volume node here, or maybe a reaction here. Okay, we would see here. Now, what's the other thing to note here? Now, keep in mind here, and this is also a good example for this, that the fibs and the auto fibs here, this is the future. This in the measured move indicator, this is the past. So these are all of the here, if I put it on this way. Okay, so you can see these are all the upcoming, here's the 50s and the golden zones that are upcoming. These are the 50s and the golden zones in the past, present, and future. So if I take these off here, now look here, I can see it. So often I'll do something like this, right? I might say, hey, whoa, I got a big pocket of golden zones here. These are potential algo reaction locations here, so I want to pay attention as we're coming into this. So I've got a lot of things here that may have me thinking, oh, okay, heads up here. Now, one thing to note here, that the short-term trend has changed to up. Why has it changed to up? Because I have a break of structure right here. So this is actually a fairly textbook flip, but let's see if I draw it right here. Come here. All right, so I'm leaving behind a little one right here. right? So here you can it drew it here, but if I wanted to draw it in, which is again as I prefer to do it, that I like to draw them myself. So I see I'm heading up here, but I've left behind. So you'll note here, here's the 50, 618, 786, 887. If it were to retrace, this is now the week high. Now that doesn't mean that necessarily that I would avoid a sell just because at this moment in time I've switched to an uptrend. I'd want to be paying attention to maybe slightly higher time frame to confirm, because we're looking for opportunities where we can have all the trends in the same direction. But of all of them, the one I would give the least amount of weight is on the 1 minute or the 2000 here or the 512, the very shortest time frames, because those are so prone to switching throughout the course of the day. I mean, you look at right here, we go uptrend, downtrend, uptrend, downtrend, uptrend. Right, every time we break structure here, and particularly here, if you have it set to 2 breaks, and then we get multiple breaks here, okay, so uptrend, downtrend, uptrend, downtrend, up, right? It's very common throughout the course of the day because we get so many breaks of structure. So as we're approaching here, I'd be looking, right? I'd want to see evidence of any signs of weakness, and I know, okay, so look what just happened. The zone that was here before has just been broken. Oh, let's see, where was it? Here, let's draw it here. So I had this one right here, right? So that one, now we've just had a close beyond. So the indicator will take that off the chart. So if I'm looking at 2 here, well, there's a couple of things to be thinking. Well, one, ideally you'd get the second one because the risk reward is going to be better. Now we know, again, through watching those videos here, that ideally if I can get into the premium area of that zone, that's more ideal. So I've just tagged the 50% of it. But note what else I've just tagged here. All right, and this is more advantage to the initial balance indicator. Here's the pre-market high, here's the pre-market mid, here's the pre-market low. Well, I've just tagged, right? Remember, algos they'll attach to anything they can. So we're coming up to the pre-market mid. I've got a cluster of golden zones over here. I've already had the one big measured move complete. Now I'm rocking right up into a supply zone. Now, am I ready to take that short right now, or would you be thinking short right now? Well, probably not. Probably not. You're going to need to see a little bit of weakness here. Let me slow that down here. So there, we've just gone all the way up to challenge the pivot high. Now, there's 0 here to suggest any sort of weakness, other than the fact that now if I do this, I'm between 2 golden zones. I easily got through the high volume node here. Now I have another one right here, but I'm easily through. Now, are you thinking, if nothing else, why would you even be considering a short here? Well, look at what your risk reward is going to be. Oh, get on the other side of that. Oh, if you were here, yep, I got to do the stop first. All right, so let's get on the other side of that, right there. Okay. Now, if I'm going for that pivot, right there, there's 11.5 to 1, right? And I'm risking 13 ticks. Now, my stop range is 12, 16 to the max, right? That's as much as I'll ever risk, right? It's just the impact is too high, right? 2, 3 losers, right? You're done for the day. So there's 12 ticks right there. I could take that trade. So commonly, which is, not everybody has their own approach to it, but one of the things that I like to do is put a stop limit 1 tick below that bar, right? So if I come back this direction, because doing it that way, I'm in control of where I'm entered, and then I can see where my stop is, right? So I can do it ahead of time. So as we're rallying up, I can look at that low. I can put in your ATM or whatever you're using here. I'll start with a 16 if I think it's too much. Like, see, I didn't need 16 here, right? There's 16. I didn't need that much. Right, so what if this gets filled? Why do I want to keep it up here at 16? No reason to it. I'd bring it back down to 12, right? This is me, right? Not that that's the right way to do it. It's just how I do it. So because I don't want to risk any more than that, and I'm trying to get maximum benefit here. Now again, look at that rip. Hard to sell. It's hard to sell without these other elements here. Well, the first thing to note, right, obviously, right, is potential double top. Potential. Now, we're not even to indicators, right, how they're looking here. This is just off of market structure. So I'm in between 2 golden zones. I'm potential here. In the same way, for the same reason, right, that this is a terrible place to short the market. Buying here into a potential double top absolutely horrible place to enter the market long. Why would you be thinking long? Look how far the market just doesn't move. It just doesn't move that far without some exhaustion, or without, maybe I say it this way, without profit taking. It used to be, I've been doing this for so long, it used to be that 20 points in the market was extreme. It's like 20 points. That's a major move in the market. Now 40 happens easily. That's a 40-point move we do right there. 40 points. Like barely breaking a sweat. Right, as I think I mentioned in the prior video here, they're just putting some stats up on this the other day. This is the highest volatility since the financial crisis. Right, I've been saying it's the highest volatility I ever remember seeing. Right, and I've been doing this for, well, not quite, almost 30 years. I mean, this is extreme volatility. 40 points straight up. Are you? Whew. Man, so all the more, while just instinctively you're thinking, holy shit, I can't sell that. As soon as you start thinking that, that's actually the time to reach for your mouse. When you're thinking, oh my God, I can't possibly sell it. Well, maybe not that blindly, but when in the confluence of everything that's sitting right here, I sure would be tempted. If nothing else, I'd be tempted here. Now, do I get enough confirmation here that maybe I've got an opportunity here? Well, let's just do the market replay here. Okay, all of a sudden we're softening a little bit. Okay, so now if you were using that technique, now, so what can I see here? If I'm getting stopped into the market right here, I'm getting stopped at the low of that bar. I'm also at the exact halfway point of the premium discount range of this order block, of this supply zone here. So I'm with as good a fill as I could hope for. Right, stops on the other side. He ran. I just showed you here. We don't need to use the full 16. We can tighten it up a little bit. We've just pinged a double top. I'm at remember the golden, the 65s that we were talking about over here, right? And so you can see it here. Here's the 60. Can you see that? Right. So there's the 65 right there. We just come up and wick it. Now if I come over here, right, you see it here. Right, there's the opening range high. Right. So once again, right, what can an algo use? Right. Here's pre-market low. Here's the opening range high. We're coming right back to the opening range high, and we're in the middle of this large supply zone here. Now look left, or pardon me, look right. Right, cluster of golden zones. Can you take that trade? Would you be nervous here? Maybe, less so. Let me come over here because I think I had, where we've got the order block here. Starting to feel a little more comfortable. I might even, so if you're trading multiples here, as I do, right? So I typically have a first target of 9 ticks. Well, that one's already out, right? So now I could just move to scratch, and now I got a free ride. I got a free ride here. So here's the next order block. But note here now, since I have the auto fibs on, as we're coming down, here's the next 50 and here's the golden zone. So if I take them off, so here they are. They're also, that's the 50 and the golden zone within this swing structure per the market structure indicator, right? So I can see swing low, swing high. There's the 50, there's the golden zone. There happens to be an order block down here at the 786 and the 887. Oh, wouldn't that be interesting if we got back down here? We can take that off. So do you see here? So it's as hard as that trade is to take, you're already, well, you've already got your, again, I don't know how you approach the market, but I've already got my 9 ticks out, right? So 9 ticks was out quick right here, right? There's your first, so you get a little over 100, right? And you're covering costs. Now you can let one run. Where's the target? Right, minimum target would be right here. Oh, maybe that's too slow. Let's let that go a little bit. Okay, so where are we? Okay, so if I come back this way, all right, so there's the 50. Here's the golden zone. So we're through the 50, so it's off the chart here. Now this will keep it on so I can see the reference. But in terms of the auto fibs, since we've gone through it, it's not there anymore. I've got a golden zone here, and I've got this down here. Oh God, I can't even remember where this goes here. But so at this moment in time, what kind of a trade do you have on your hands? Right, so you've already, let's just use the turn. So there's 875 on your runner. And now note a couple of things here. We're right to the edge of the value area. Right, so this might, again, algo is going to use whatever they can. So that might be something to be paying attention to. I've just come to the edge of the current value of the day. Right, anything down below here, right, I don't have enough business being done down there to really even register. So we continue to push here. Now there you see the auto fibs kicking in on the other side. Remember, this algorithm is on both sides. We don't know, nor do those that are behind this algorithm, nor do they care which side is going to win. They don't care, right? It's running on both sides, right? We don't know who's behind it. We don't know who's running it, who finances it. We don't know anything. All we know is, I mean, it could be the same company on either side. We don't know, right? It's likely an institution. We don't know who's behind it, but we can just see, oh, well, if this is coming back this direction, well, hey, I got a 50 in a golden zone here. Do I have any order blocks? Well, I don't actually here, so let me take this one off, right? Because that's this one up here that we just looked at, right, in that golden zone. So let me take that off here. So here you see it with the measured move. Remember, this is future, this is past. Oh, I mean, I could draw this up this way, right? So from here to here, right? You can see it this way. There's the 50. There's the target, right? Again, that's the algo footprint. I just have we have it built in as a custom tool in our indicators, or in our toolbar. Okay, so here we are. Oh God, let me speed this up here. It's gonna be a long video. Let's go to 10 and see how that does. Okay. Okay, so let me pause the video here because I'm looking at on the 1 minute here. This is going to be some good stuff. So let me pause right here and we'll come back to the next point where it's a decision time. Okay, so back in a second. All right, picking up where we last left off. We've come straight down here. We're in between a 50 and a golden zone here. Here being the 50, here being the 618. And I think we just let this play out here. Now note, right, the supply zone is still here because it's not broken, right? We have to have a close above it. So if we're going to start to come back towards this, potentially another opportunity. So let's just play it and see how we look here, and then with just a few more examples here, we'll wrap up here on the tick charts, but they're just a few that are really remarkable. So one thing to note right at this moment in time here, since we've had this break of structure here, and we've come up here, although we did not break this high, the trend is up, right? Trend is up, right? So this is the week high. Okay, so let's let that play. See how we come, and we're coming right back to where we left from. Right? Now, note again, you miss it if you're not aware. This is the pre-market mid. Seems to be influencing the market. Now that's likely algo driven, right? It's not one thing I can promise you. It's not random. So for whatever reason, there's an algorithm here that's defending here at the pre-market mid. In addition to the fact that there's a cluster of golden zones right here, so we know this is algo thick right here, right? There's a lot of reasons for algorithms to be responsive here, right? There's only one we can identify, right? The one that we track. But you can ascertain here in the same context. It looks like the pre-market low here seems to be in play, right? Bounce, support, resistance. Now potentially support again, we shall see. But if you were here right at that moment in time, and again, once we get over to filling out the templates here with some time based, but if nothing else, right? Hey, again, it went just far enough to get into the premium zone. Could you take that trade a second time? It's not as easy as it looks, right? Once again, you'd think, oh, the market it didn't go down and get this low. We bounced at the 50. It's going to get target. Right, so we come back into this same, so you can kind of see how the algorithms are responding. Where is the algorithm active between the 50 and the golden zone? Right here. Where are they active? Right, that's where they start buying. Here's their target right here. Right, let's let it play here. See what we do. All right, so is this an algorithm firing? Well, again, we would look for some clues. Now, this is important. What I want you to show you here. So, would you have had a decent trade here? Well, again, would you have taken it the second time? Maybe, maybe not. But there's another 868 ticks, another 850 here. We can see some support building here. Now, yet again, remember, we're not getting. Here's the low, right? If they were going to go after that low, that's what they'd be after. We know this is the week high. Is this we don't have a new low yet, so this is more probable. Again, it's all probabilities. More probable to break because it's the week high. Because these drives here, hopefully you're understanding here, this didn't give me the new low. So this remains the week high. We retrace again. It's another opportunity. They can't do it, right? So are we coming back again? Eventually, you would anticipate that this high is going to break, right? And then we're going to come up into these upper supply zones here. So let's just see here as we play it right now. This one definitely. This one a little bit trickier. We'll look at some ways you might have had some access there, but I did not take that one for what it's worth. Oh, let's see, I'm on 10. Let's speed this up a little bit because I want you to see what happens when they break. All right, so here we come up to try and approach it. Here's the push through, right? Still resistance there. Now there's the clear break. So note, right? So this high breaks. So you note the indicator now, break of structure. So this is the next high. This is the next swing low, right? This is still the weak high because we don't have any new lows here. Hopefully that makes sense. So if we look here. Oh, again, as I just drew it here, you're in that zone where algos are responsive here, and they had a target up here, which pardon me, here's the target right here. Oh, so if I'm drawing this, swing low to that pivot in the pocket, right? You see, I'm probably a tick or two off, but so here's the target right there. So what I wanted you to see here is that all those zones that were sitting here, once we get a close above, that's ancient history, right? It's off the chart. What's next? Right, so we got a few up above. So let me oh god, here, I don't want this to be too long here. So I'll fast forward here to the next decision point, and then we'll wrap this one up with a few. Well, I may even fast forward through the day so this doesn't go too long. Okay, back in a second. All right, going forward here, so here's that last pivot low. We've had this little grind up here. At this point, the IB indicator starts to show, but it's not locked in yet because we're not to 10:30. But I'm now past the first 30 minutes, as I'm now, it's past 10 o'clock. So I've gone from opening range to now I have the initial balance here. But again, it will move if the market goes higher here to define the first 60 minutes. So I've left behind this. I'm using the full candles here just to emphasize this. So I've left behind this demand zone here. I've got no supply zone here other than up above. And again, note here I've got lots of measured move, right? So I've got lots of resistance up here, algo resistance up above. All right, let's just play this forward here. What am I on? 15. Okay, so what you see what just happened here? So this is the swing low, this is the swing high. We come into that demand zone. Now, would you have known to take that? I mean, that happens pretty fast. There's not a golden zone there. This is just a pure retracement into a fairly large zone. I mean, that's a tricky one to take because you've got a 38 tick zone. Now, if I go over here and I'm just on the wick, right, it looks smaller. Right, here's just wick, which is typically how I will keep it. Although, again, as I'm just trying to show you, right, I know that the actual zone is here. Right, because it's off of the down move here, so I see it come into it. We don't get into the discount zone, so maybe I did not take that trade. Well, let me come back over here so you can see these. But now I'm coming back into it once again. Right, this is why that's a 40 tick range. Right, these are big ranges here, so that's why I keep them on the wicks only. So as we come back into it, so now you see we're leaving behind another very large one here. If I come over here, right, you barely see it. So if I come over here now, so let's let that play here. So where we go. Okay, so we've come in and out of that zone. All right, now we're back in that zone. Okay, so do you see here? We're coming into this zone here. This is still the weak high, but we can see the resistance up here. Maybe it's an easier way to do it here, right? So all of this here. So we're pushing to get past that here, but again, we'll get over to how the indicators would guide us here. But if nothing else, this might be an area because we're in the premium zone here, I could probably get into something here. If my stops there's 14, there's 15, there's 16 ticks, right? So if I was looking for something on the short side, where's my little line here? I might look for something like a break of the low of that bar, right? I like to get stopped in, right? So if we're going to come down, then I know, okay, well, if it's going to be 16 ticks from that entry, well, where's my stop? Right there, right? So if pardon me, let me get my entry right there and bring my stop to 16. Right, so if I'm going to get stopped in here, I can be very deliberate, very precise about where my targets are. So this would be a minimum target, that prior low, right? Because I know I have a demand zone here. So there's a little over 3-to-1 on that trade, not bad. That's the max I'll risk on any single contract. Here's 200. So let me push that off. So could you get into this trade? Oh shit, that may be too fast. Just let it play here. You're in a supply zone. So if you were so here's the entry. So I'm already stopped in. right? So because I use a 9 tick for my target for the first one here, so I'm already stopped in. Did I get 9 there? Yep. So there's 23 ticks. So the first one's out. So now the stop, once I get plus 12, mine goes to scratch. So worst case here, I pick up the C note, right there. So I'm stopped out on the second one. Right now, do you want to go again? Right, those are. Right, I mean, I could use the same entry point here, or have pushed it up one, right? But after it just being stopped up, I wouldn't be that quick to go again. I'd be kind of watching here to see maybe what. And I think, as I recall, I was looking for something like this, maybe for another opportunity. Let's let this play here. And so one thing you can certainly see is I've got an awfully large demand zone down here, which is, once again, it's too big. So you see the first one breaks, right? So there was this one that gave me a little change of character. So that one breaks. So now we're coming into the second demand zone. Now look where I look as I come back down to this. Okay, so look where we are. I said this before. This is stuff you have to develop an awareness of the playing field, right? So we're coming right back down to this area here where the market seems to be responding. Now we don't know why. We can only ascertain. Oh, okay. Well, looks like maybe there's algorithmic activity there for whatever reason, right? We don't know, but I can look at this and say, okay, well, yeah, let's push you off to the side. If you're just looking at the day here, well, maybe it's easier over here where it's not so crowded. It might be easier to look at it this way. Okay, so the first thing we had is our measured move, right? So come here, right? So we get our big footprint, right? So there's the measured move, right, in all its glory, right? It's just, again, all day long, right? So we have that first. Now don't forget here, some of the advantages of having the toolbars here. It's very easy to draw up geometry here. Actually, I think it's this pivot here. So we go here. Don't miss that geometry, right? So. Oh God, it's easy for me to get sidetracked. But this is my signature trade, right? So corner pocket, right? So we don't quite make a golden corner, but we get right into the corner. That's got 80% probability of getting that median line, right? If you're not familiar with that, oh well, I've got some videos here that you need to see, right? So that's a trade you need to be aware of. But one of the advantages here is I can look at this and say, okay, well here's the geometry, here's the measured move, here's the algo target. So do you note how it hits the median line as it hits the algo target? Okay, so I've got that. Then, just kind of looking at the board here, since this seems to be, and what we're doing here is we're kind of ranging. So I've had the initial drive down here. Here's the opening range, the pre-market low and the pre-market mid seems to be confining the market, right? So I get a little push below, I get a little push above, but it looks like for the most part, now I'm in this range. And now I've come all the way down here, and to note a couple of things, right? That's why you got to pay attention here. So all of a sudden now the trend is down. Why is the trend down? Because I just had a break of structure here, right? So I had first change it. Well, it's hard to see, right? Because if it'll shrink it up. So here's the change of character. That's the first one. Now here's the break of structure, which changes the trend now to down. So what am I thinking? So here's the weak low. Here's the weak low. So, oh God, let's bring you back over here. All right, bring it over here and see what we do next. God, I don't even remember. Okay, so let's see how we respond. So clearly something is happening down here at 41.10. Yet again, right? So push this off here. So support, resistance. Is that going to be support again? Well, let me so you don't have to sit through that. I can't remember what happens here. Looks like we get a little break. So you at this point in time, you might be thinking, oh, they're going to go after the IB low, right? They're going to challenge it. Now look what's right down there, right? Demand zone. Little reaction here. So note here, since I have a change of character, which you can't quite see, you get a change of character here. So this becomes the weak low. Right now, do we get through of it here, or is that little demand zone here going to hold it? Trend is down. You wouldn't necessarily be looking here for a rally, yet nonetheless, right? So, right, one more reason here. While okay, so I would want to see what else can I see? I would want to look at my indicators. I might look at a footprint chart. I want to see what's happening here. Now, if we're going to break that, we don't break it. That's still the weak low. Note here, it's still there. If I come over here, it's still there because it has not been broken. So you see that. So the full range. So I've got ranges on top of each other. So this would be difficult area to be trading here because you got a supply zone on top of a demand zone here. Would be and if nothing else, where's this thing? It's consolidation, right? You can just see what's happening here. So this would be a tricky time to be trying to enter or make a guesstimate about where the market is going. I don't know what's happening here, but one thing I can see that at this moment in time, the trend is up. Now I'm coming back into a big supply zone here that has been responsive, right? So the market has responded here repeatedly here. So what we had, right? So the first it was here, then we're back to it. Then we get away, then we're back to it. Then we get away, now we're back to it. We break the first one, but now we leave another cluster. Now coming back to it, are we going to go again, right? Is this just going to be the resistance the market can't break, or are we going to get a trend change here and go up and challenge some of these upper supply zones here? I'm going to go over to this one because I think it's a little less crowded. All right, let me here. I'll pause the video here, and then we'll fast forward to next time there's a decision point. Well, one thing you can note right here, right? If we're coming up to this area, all of this is going to be of interest, right? Coming up here, here's a 50, here's a golden zone, right? But now, of course, we redraw them slightly differently. But there's now that it's 10, 20. We're coming up towards the IB high, so this would be an area of interest. Okay, let me pause the video here, and then we'll just carry on here with a few more decision points. Okay, back in a second.